One of the things that I find remarkable is that 66% of the American people believe that tariffs are the right way to go. I also believe that probably half the American population doesn't understand the blowback that could come along with tariffs. And I think that should that blowback, should that impact in the economy trickle through, many of these pro-tariff Americans are going to be disillusioned.
Jim, we were citing rising rates as one of the concerns on that wall of worry. And a couple of days ago, we had that interesting report out of Reuters saying that the BOJ might back off of easy money policies. And we saw the reaction. It was sharp, it was swift, and that yield curve steepened significantly. Is this a concern of yours?
No, not really. I think this is a one-off. So you're absolutely right that the spike in Treasury yields happened off of a Bank of Japan rumored announcement, if you will. They didn't really announce anything. And the thought is that they may ease up on yield curve control, which is the de facto ceiling of 10-year JGBs at 10 basis points. What we have to understand with Japan is that they've been gorging themselves at the table of easy policy for a long time, and all they're doing right now is loosening their belt so they can eat more for longer. So the fact that they may allow interest rates to rise, we don't know yet, that just tells us that they're trying to help the banks, they're trying to allow the banks to direct credit to the real economy, hopefully stimulate some growth. That might mean that 10-year yields in Japan might have to go from 10 basis points to 20 or 25 basis points.
Right. But that's
this
100%
is not
increase.
The start of a trend.
But we saw
yes,
the reaction in the markets here in the U.S., and the market reaction was still pretty swift and still pretty sharp, even with a small, the small easing up on stimulus.
Japan is a global anchor rate, right? U.S., Europe, Japan. So when those rates go up, it's important. But the point is this a new trend to move higher? Is this a policy to move rates much higher in Japan? No. This is a one-off thing. 10-year yields in the U.S. adjusted 10 basis points higher from a week ago. I don't see this as a big deal. I think it's going to be hard for 10-year Treasury yields to get materially above 3% for any period of time.
Jack, rising rates, rising costs, all these rises are indicative of a stronger economy. So are we worrying about the wrong things here?
Well, not necessarily. Generally, rising prices, rising yields are emblematic of an economy that's late in the business cycle. I would tend to agree, though. I think as long as the BOJ and as long as the ECB continues this pedal-to-the-metal monetary policy, I don't see the 10-year rate moving much higher. Keep in mind, the 10-year rate right now is 2.5 percentage points higher than the German Bund, which would suggest then to make an investor ambivalent or equal, the dollar would have to drop about 28% against the euro over the next 10 years. So that's probably not likely. So that's why there's so much more demand for U.S. Treasuries in the 10-year, given that the alternative rates are just so low. So I'm not expecting a big ratchet up in 10-year Treasury. In fact, I argue that if we do invert, which I expect we will, it's not necessarily a signal of recession. I think it's just because the curve is so distorted.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.